A massive 75 basis point rate hike announced on 22nd September by the US Federal Reserve, clearly indicating that the pain of inflation is not ending in the US anytime soon. A day later, the UK followed suit. Both the countries are currently grappling with prices at a 40-year high. The rate hikes, instead of soothing the jumpy financial markets, have made investors more jittery and uncertain as to when the upward march of the cost of money will stop.
At some point, as the stance of monetary policy tightens further, it will become appropriate to slow the pace of increases while we assess how our cumulative policy adjustments are affecting the economy and inflation.
Inflation in India, which rose to 7% in August, is clearly beyond the comfort band of 2 to 6% set by the Monetary Policy Committee. Analysts say it is a given that the Indian Central Bank will also raise rates this coming Friday. A poll by Business Today TV reveals that a majority respondents are expecting a 0.5 percentage point hike. There is, however, another school of thought which feels that the current inflation level is not as much as a concern as the potential economic slowdown which repeated interest rate hikes may bring.
Yes, we have some amount of this imported inflation problem, but our supply side is in good shape. Our core inflation, the underlying inflation of our system, is not a concern. Domestically driven inflation has peaked out. Core inflation has peaked out. But can I make some statement about what will happen to energy prices abroad? No. Will we be immune, given that we are a major importer of many commodities? Are we immune to global trends? No. There will also perhaps be some turbulence to food prices given the droughts around the world. And even in India, we have had uneven rainfall.
The US markets have been skidding for the past 40 days, with the Dow Jones Industrial Average having lost more than $4 trillion in market cap since a high of 34,152 on the 16th of August. India's stock market has lost around 13 lakh crore rupees in just the past 4 trading sessions.
Almost all the asset classes are down,
Yes.
apart from equities. If you can look at the rupee, if you can look at the commodities like oil or even gold prices. So all the fall is coming at the same time, and that is something which is creating panic across global markets and Indian markets. So I think it's a very important aspect that investors should be very cautious at this point of time.
Another big victim of the sharp rate hikes in the US are global currencies, which have plunged to historic lows against the greenback. While European currencies are among the worst hit, the Indian rupee also touched its all-time low of 81.65 to the US dollar in trade today. The rupee has fallen by around 2 rupees 40 paise in just a week, despite the billions of dollars sold by the RBI. Bureau Report, Business Today TV.
If you like the video, do like, comment, share and subscribe.